Ignore the headline index surge. The real signal is 3.14 trillion KRW. That is your bottom line up front. Why does this matter to your US portfolio? Well, this massive Asian liquidity injection confirms the AI demand cycle is accelerating, and it's absolutely going to dictate tonight's US execution. If you're trading Nasdaq without looking at Seoul, you're literally flying blind. Quick audit on yesterday's call, the levels held exactly as predicted. Today, the Korean market closed with what looks like a massive optical surge across the board. But hey, don't be fooled by the camouflage. The smart money wasn't buying the index. They were hiding deep in the supply chain, quietly front-running the next tech leg. Let's dive right into this explainer, break down this capital flow, and analyze the exact link to the Nasdaq 100 at the open.
Lock on to that shock number right there on your screen, 3.14 trillion KRW. That translates to exactly $2.16 billion of concentrated foreign spot buying injected straight into the Asian market in a single session today. We're not going to fully unpack its exact supply chain impact just yet, but you absolutely must understand its sheer gravitational weight. Fun fact for you, we haven't seen concentration this aggressive since the early innings of the 2020 tech rally. Think about it. 96% of this foreign net buying was directed exclusively into the electronics sector. They totally ignored everything else. It was a targeted, surgical extraction of inventory. In plain English, the smartest players in the room are aggressively hoarding the supply of physical tech components, bracing for a massive downstream demand shock.
Now check out the sector coupling on the heat map. This confirms a synchronized global rally into key supply chain nodes. We're directly connecting the prior session's USAI CapEx reconfirmation to this massive Asian capital flow. Overnight, Intel surged 12.9% and Micron gained 11%. Let that correlation sink in for a second, right? That US price action was the initial trigger. The transmission path to Korea? It activated instantly at the open. Here's the underlying logic. US big tech AI server expansion inherently cranks up the physical demand for DRAM and high bandwidth memory. Without those chips, the whole AI revolution just grinds to a halt. Recognizing this, foreign capital immediately moved to lock down ownership of the core global AI memory supply chain. Meanwhile, the KOSDAQ, which is heavily weighted with secondary assets outside the specific loop, actually declined by 0.29%. The smartest money flow ignored the noise and remained hyper-focused on our leading indicator. Time to execute the Canary Protocol. The main index masks the true battle, so we've got to look for upstream alpha assets that are decoupling from the herd. We're contrasting Samsung Electronics against our strategic tech partner, SK Hynix. Samsung absorbed this massive foreign demand with a short-to-volume ratio of just 0.99%. For context, anything under 1% indicates pure, unhindered buy-side signal activation. Literally, nobody is betting against it. But look at SK Hynix. This is our canary signal right here. It posted an elevated short-to-volume ratio of 3.54% while still surging over 10%. So what does this actually mean? Well, it reveals a massive tug-of-war for control behind the scenes. We're seeing simultaneous large-scale short covering clashing violently with heavy new short initiation. The market giants are aggressively restructuring their positions, fighting tooth and nail for dominance over the specific strategic tech partner.
And that brings us to the Gosu insight. How exactly did this massive ownership transfer happen without completely breaking the market mechanics and sending prices to the moon instantly? You know, it comes down to a structurally calculated position swap. Simply put, foreign investors bought massive amounts of actual stock, the spot buying, while simultaneously hedging their bets in the futures market to the tune of negative 2.33 trillion KRW. This aggressive demand for the underlying stock pushed its actual premium up, making the futures look heavily underpriced in comparison. Seeing this spread, domestic institutions did the highly logical thing. They gladly handed over their highly priced stock to the foreign buyers and scooped up the cheaper futures instead. The correlation, with a row of 0.88, mathematically proves this was a calculated position swap, not just some random directional exit. The institutions supply the exact physical inventory the foreign buyers demanded, keeping the whole capital engine running smoothly.
Watch the SMA 50 tactical level. Wait for the 15-minute candle. Enter if NQ reclaims 25,526. Target AI data center infrastructure. Watch the semiconductor long positions. Invalidate if US 10Y breaks 4.45%. Wait for rate environment stability. Exit partial position at 25,071. Exit full position at 24,843. Watch the volatility regime closely. Watch the VIX at 17.3. Apply standard positioning sizing immediately. Invalidate if VIX crosses 20. Wait for the primary scenario. Watch the final macro filters. Wait for the ADP print. Invalidate if ADP beats consensus. Watch the US 10Y spike closely. Watch the pending US-Iran MOU. Exit if the negotiations collapse. Watch for WTI downside pressure. Watch pre-market target volume. Invalidate if the volume drops. Wait for the New York open. Target acquired and locked in. Watch critical US software nodes. Anticipate which software nodes activate. Stay sharp out there today. Execute at the US open.